China's economic growth slowed to 7.6% in the second quarter, slightly above the 7.5% forecast. Now, this is China's lowest recorded GDP growth since 2009. As investment slowed and demand fell in key markets such as the US and Europe, the trajectory of the Chinese economy is crucial both to China and the world, as it accounts for about a fifth of the world's total economic output, and any slowdown may hamper a global recovery. At the same time, many of Asia's biggest and emerging economies are becoming increasingly reliant on China as a trading partner. So a cooling Chinese economy will have a domino effect on all its trading partners, including Europe and the US. But a slow growth will also ensure that Chinese policymakers act fast to aid the economy, including injection of stimulus, something that market players are hoping Beijing will do. Reuters correspondent Tara Joseph files this report.
Are the good times still rolling in China? After all, here is a country which over the last decade has changed geopolitics, has transformed the world's financial landscape. I've been talking to Stephen Green. He's been living, working, studying in China for over a decade. And I asked him whether the slowdown we're seeing is so drastic and whether we're at a changing point for China.
Definitely in a slowdown, and the data today suggests that we have slowed down considerably this year. I think it's not too much to worry about. I think the government has really wanted to slow things down from last year when we had inflation problems, and that's what you're supposed to do when you have inflation. China's, over the medium term, over the next maybe 5-10 years, the days of double-digit growth are over. 7 to 8% is probably a reasonable expectation for China in the next 5 to 10 years. But you've got to remember we're already a very big economy, so 7 to 8% shouldn't be too bad at all.
But the way you paint it, have people just been overblowing the sort of China picture to begin with, that it's this incredible, miraculous, growing country, or are we really just have to put a reality spin on what China's doing?
There are extreme bulls and there are extreme bears, and the problem is China has fantastic things like low urbanization and high savings rates, so lots of easy growth to come through urbanizing with all that high savings. That's a great thing. And then, of course, there are problems such as the real estate sector, where prices are very high and there's a large inventory of properties that have to be sold. But the problem is you can't just look at the negatives, you can't just look at the positives, you have to put it all together.
But are we at a turning point? Is this a turning point for China, a different era really that we're entering now, a more realistic one?
We've been at this turning point for a while now, and there's probably a few more years to go. Yeah, I mean, I think the era of very strong investment growth, strong export growth, that's clearly coming to an end. It's a phase shift that's going to take place over 5-10 years, and then 5-10 years China will gradually become a more consumption-driven economy, and that hopefully will take place quite smoothly. There's the potential for some volatility.
In a word, though, China's economy right now, hot, warm, cold, business as usual. Which one would you choose?
Oh, I think we're probably a little bit colder than the average temperature at the moment, and I think probably if you look at the real estate sector particularly, it's going to get a little bit colder on the construction side, even if the retail side, people going out to buy apartments, is actually warming up quite nicely.